Okay, everyone, welcome back to the second series in the order flow, right? So in this video, we're going to be going over order flow again. We're going to be going back to what we learned from the previous video, part one. If you haven't watched part one, I recommend checking that out. So let me start off by asking you, why is order flow important and why do 90% of traders fail, right? So if 90% if 90% of traders are using candlesticks to trade and 90% of traders fail, my question to you is, why would you even bother using them, right? So behind every candle essentially is buyers and sellers. I went through this in the last video, so again, highly check that out. But in this video, we're going to go kind of straight onto the charts and we're going to go through some examples, right? We're really going to dissect order flow on the ATAS platform, right? So I'm going to introduce everyone to this is now the ATAS platform, right? So ATAS, this is the ATAS platform, right? This is what I use to determine order flow. So it's the same as a regular candlestick chart, right? But when we zoom in to the candles, we essentially are opened up to this, right? So this is order flow. So what you see over here is a bunch of colors behind every single candle, and this is essentially the delta. So the delta is what we kind of studied last lesson, right? So the delta is the bid and the ask. So I want traders to understand that the market is an auction, right? The market is an auction, right? So all the numbers you see are simply buyers and sellers. So let's just break down a few candles as we speak, right? So before we do that, I want traders to understand, because I get questions about the settings I use within the ATAS platform. So let me explain the settings, right? So again, this is the ATAS platform. If we head over now to settings, let's quickly dissect how I essentially configure my settings, right? So the background, of course, is white. So the visual settings, again, if we quickly look at this, the visual settings we can see over here is, again, white background. I've removed the horizontal lines because I don't really like them. And now from here, we will skip over to what we call cluster settings, right? So quickly before we move on, let's quickly change the text color to black. That should be better. So now we go over to the cluster setting, which is essentially the main kind of bread and butter of order flow, right? So order flow again gives us the bid and ask data. That's what we learned last lesson, right? So last lesson we learned that every candle has bid and ask data, right? So the bid represents to aggressive selling. So let's go back to the ATAS platform, right? So here we have the bid and the ask. So the bid, for basic knowledge, represents the total number of market participants that are hitting the bid that look to aggressively sell. So these are market participants who are looking to aggressively sell. They want to drive price lower. The ask is the opposite. The market participants hitting the ask are looking to drive price higher, right? These are going in at market orders. These are going in at market prices. So the bid and the ask data you see, right? Every number you see over here is a live transaction over here. So we're really going to break this down and understand what this means, right? So again, let's go to our settings. Let's go to our cluster settings. And we are now going to change this to Delta profile. Now I'm going to explain why we've changed the Delta profile in just a moment. Other things you can do is you can change the text and you can change the text color. So let's change that to black. So it's very clear what we're looking at. So this is a red candle. As you can see over here, this is a red candle. Now, what will allow you to kind of separate yourself as a trader going into the next, 2025? Is the ability to understand what other traders don't, right? Other traders are using bodies and wicks. You see I fair value gaps, you see regular fair value gaps, you see liquidity sweeps, you see market structure, right? All these things are delayed and they're derivatives of order flow, right? When you can understand the order flow and you can understand and read the numbers, right? Because the numbers are market data, though. This is based off statistics. This is based off market data that is hitting the markets live, right? So this is data that prints. This is data that prints at every key level. And we're looking to read what's going on inside of this candle, okay? So let's take a look at this. We are now going to understand this. And this is something we went over last session, so we won't go over it in too much detail, right? So again, let's look at the chart settings in correlation with this. So this happens to be one candle I'm looking at, right? If we go to cluster settings, the cluster settings will give you the bid and the ask, right? So this is what we want to be focusing on. So if you are using the ATAS platform, I recommend having these settings, right? So the bid and the ask. So let's quickly go over what that means, right? The bid over here. So let's take a look at this top row over here. The bid is 83. The ask is 110. So what does that mean to us as traders, right? So that means that there's 83 market participants hitting the bid, which means that there's 83 aggressive participants that are looking to take the market lower. They are aggressively selling. They're hitting the bid and they're looking to aggressively sell at market prices. The ask is 110. So that means that there's 110 market participants looking to hit the ask. So there's 110 market participants that are looking to drive price higher. Okay, so we can see over here, the color here is blue. The color here also is blue and blue. So we see a lot of blue in this region. Now, what that means is that the ask is greater than the bid. So last order flow series, right? If I just kind of play this on a little bit. Last session, we looked at the delta, right? So the delta is the bid minus the ask. Okay, so sorry, this should be the other way around. It's the ask minus the bid, right? So when you see a blue delta, what that means is that the ask is greater than the bid, right? So when the ask is greater than the bid, what that means is that there's more aggressive buyers than there are aggressive sellers, right? This is the basics of order flow. So order flow isn't that difficult to understand once you get your head around the delta, and then we're then going to go over to the volume. But it all comes from understanding one simple concept, that the market is an auction. It's not an algorithm. It's not a bot. It's not moved by, retail buying and selling. It is essentially an auction. It's an auction between big players, and our job is to read what the big players are doing via the order flow. And if you can read what the big players are doing via order flow, you have a much higher strike rate because you actually know what's happening behind the candles. It sounds simple, but when you have a fair value gap, you don't really know what's happening within that fair value gap. When price reacts to a fair value gap, you don't know how price is behaving at that fair value gap. When price takes out liquidity and breaks structure, you don't know if the move was strong or weak, right? You don't know if it was a market structure shift, or you don't know if it was a liquidity sweep, right? Using order flow and reading the why behind every candle gives you that advantage. So this is my settings on the ATAS platform. We're using the delta profile. So what does the delta profile actually represent? So the delta profile is represented with the colors, and the colors are very self-explanatory. A blue represents aggressive buying, right? More aggressive buyers than there are aggressive sellers, right? The red here, so this is 1K, so this is 1,000 for 817. So the delta there is going to be negative 817 minus 1,000. So that's around minus, around minus 200, right? So the delta is minus 200. So a minus delta means that there's more aggressive sellers than there are aggressive buyers at that price. So this is again the futures contract. So at price 60.83, there were more market participants hitting the bid than the ask. This is what we mean by more aggressive sellers than there are aggressive buyers. Now, this is very, very important, right? But for now, for basic knowledge, I want traders to really understand how to read every candle, right? So when we look at candles on the surface, right? If we were to zoom out at this, when we look at candles at the surface, a quick tip I want traders to understand is that when we come into an inefficiency or a fair value gap, right? So if I just change the screen over here, when we come into a fair value gap, we never really know who is in control in the market just by looking at candles, right? So if I were to draw, we see a fair value gap over here, very, very clear ICT fair value gap, right? So if this is a key level because it's a fair value gap, and we're going to be going into key levels in the next kind of session in a lot of detail. But what happened over here is super, super interesting, right? So when price comes into a key level, in this case, it is a potential selling level because we had a fair value gap over here. As price came into this level, we want to be reading what's happening with the orders, right? We want to be reading what's happening over here, but more specifically over here, right? So again, this is the 15-minute time frame. If we go down to the 5-minute time frame, we can really begin to dissect what was going on between the buyers and the sellers. So just for basic knowledge, think about this, everyone. I want people to think about this. Now, we see majority blue delta, right? And we're coming into a bearish fair value gap. Remember, this blue box you see over here is a key level. It is a bearish fair value gap, right? So on the surface, you don't really know just by looking at candles who's in control, right? These candles, we see big wicks over here. We see a massive impulse. We see a massive down pulse. We see a massive V shape, right? So we don't know whether to take it long or short from this point. We don't know what's going on. We don't know if this is a true fair value gap over here. We don't know if it's going to hold or not, right? So the way we can actually determine this in real time is by reading the order flow, right? So these numbers print in real time. So you can see exactly how many aggressive buyers and how many aggressive sellers there are. And that's the beauty of order flow, because we can actually see what's going on behind the candles as opposed to blindly trading off any fair value gap. So if we again go to settings and we move this over to the right, we go to cluster settings, what we can see from the last session is we can see the bid and the ask, and the market is an auction. So let's start with the bid and the ask. If we look over here, right, let's start with this candle. If we look over here, this is 0 by 60. So what that means from an order flow perspective is that there's no market participants hitting the bid. There's only market participants hitting the ask, right? So for those who remember from the previous session, we called this a finished auction, right? So this was a finished auction. So if we move on, the volume, which we're going to come on to, right? A finished auction was when there's a 0 on one side. A 0 on one side means there's no aggressive buyers or aggressive sellers, right? The entire auction is wiped out. So that means buyers, and for basic knowledge, when you see a 0, that means that buyers and sellers have both agreed on a fair price. So if we take this back and we just use a little bit of logic here. When price comes into a bearish fair value gap, we want to know if that bearish fair value gap is actually going to hold. We want to know if the aggressive sellers are going to show up. We want to know if sellers are really in control. So how do we do that? So order flow allows us to essentially see who's in the most pain and who is being absorbed, right? Who is being exhausted, right? These are terms I'm going to go over in this video. So if we see a lot of aggressive buyers, coming into a bearish fair value gap, and those sellers aren't able to drive price higher, because we can see price kind of exhausted out before breaking this fair value gap over here. So we see a ton of aggressive buyers. So let's actually read the order flow step by step. We're coming into a bearish fair value gap, and we're coming in with tons of aggressive buying, right? We see 876 for 418. So that's roughly a 2-to-1. So there's twice as many aggressive buyers and as there are aggressive sellers, right? 800 for 400. That's only 800 buyers for, only 800 sellers, and only 400 buyers, and over 867 aggressive buyers, right? There's more buyers than sellers, but the market failed to break this level. So you want to ask yourself, when there's lots of aggressive buyers, but the market isn't moving higher, what does that tell you about this zone, right? What does that tell you about this zone over here? What does that tell you about this zone over here? So this is a bearish fair value gap, and there's lots of aggressive buyers in this zone. There's lots of aggressive buyers that are trying to drive price higher, but the market isn't budging, right? The market isn't going higher. So what does that tell you about the fair value gap, right? So that tells you that we are at a strong level of supply. We're at a strong fair value gap. The fair value gap is being held. So what that means essentially is that a lot of traders kind of mess this up as well, where they think there's more buyers and sellers, right? Oh, there's more buyers and sellers. There can never be more buyers and sellers, because in auction, there's only ever buyers and seller. For every buyer, there has to be a seller, and for every seller, there has to be a buyer, right? It's always a 1-to-1 ratio. So when you look at this, right, let's take a look at another example, right? We have a finished auction over here. So again, going back to the lesson, we have a 0 on one side. So when we have a 0 on one side, it means the auction has been wiped out. Now the row underneath is interesting, where we have a finished auction. So the market participants have agreed that this is a fair price, right? So the market is less likely to visit that price. So this price specifically was at 60.83. So once we have a wiped out auction at 60.83, the 0 significantly increases the chances of price not going back there. So this is the power of using order flow. When you see a 0, it means the auction has been wiped out, and there's a lower probability that the market is going to retest that price. Now, if we look at the row underneath, we have 173 for 500. Now, from an order flow perspective, from the delta here is massively positive, right? And then from here, we see a lot of aggressive red delta, right, after this. So this is the beauty of order flow, because you can read exactly where the orders are failing, right? These are failed buyers. These are failed buyers. These are failed buyers because we're at a key level. We are looking for the failure of, in this case, we're looking for a failure of buyers to tell us that the bearish fair value gap is strong. And that gives us the indication to take price lower, right? So one thing I look for again is I look for sudden switches of the delta at key levels, right? So this key level had a sudden switch. So we had 173 for 500, and then we had 638 for 277. Look at the switch. Look at this aggressive, rapid switch in the delta. This means that buyers are very, very quickly being changed to sellers, right? Lots of aggressive buyers have now been switched to aggressive sellers. Even here, 500 for only 99, massive switch from over here. So what does this tell us from a trading perspective? What does this tell us from an order flow perspective? Well, buyers have failed, buyers have failed, buyers have failed. So we've seen multiple buyers fail to drive price higher, and then we see a sudden shift to the downside. So this is on the 5-minute time frame. On the 1-minute time frame, you're able to use this information and catch sells from this level. And as you can see from here, the sellers were very much in control for the rest of the session. We had a massive move to the downside, and it all comes from understanding what is actually happening at those key levels. So this is something we discussed last session, where we looked at finished auctions and we looked at the order flow. Now, the other thing I want to introduce traders to is the volume, right? The volume is something we will go over in future lessons, but we're going to start off by understanding how the volume actually works. So the volume itself is another tool in the cluster settings. So if we go to the cluster settings, we go down and we add additional footprint. Let's go to the additional footprint and see what settings we have. Volume comes up as the first one, and we want to be looking at the volume profile. So what do we mean by volume, and what do we mean by volume profile? Well, it's very interesting to kind of break this down. The volume is essentially, it's very similar to the delta, but it's essentially the opposite sign. So the volume is the bid plus the ask, right? The volume tells you the total number of transactions hitting the market at that moment. And that's the secret with order flow. You're reading the transactions at that moment in price. And that's what allows you to determine in real time whether the price is going to move up and down. And you're not simply relying on wicks and bodies to determine the story of price, because those alone are never enough. But if we look at the volume over here, right, what we begin to see is very interesting, where if we break down this candle, a regular candle will not give you this information, but when you dive in deeper, you can see that a lot of volume is concentrated in the lower half of this candle, right? The upper half has a lot less volume, and you can see that with the profile, right? So the setting I've used over here in the ATAS platform is the additional footprint, right? So the volume profile essentially gives you the bid plus the ask, right? So if we just break down an example over here, 60 by 0, the delta is 60. The volume in this case is also 60 because it is 0 plus 60, right? A better example will be the one underneath, 134 plus 227, so that's 361. So the volume for that particular row, for that particular price, so for example, this price here is 62.5, right? So it's 62.5. The total number of transactions hitting that particular price was 361, right? We can tell by the delta that there were more aggressive buyers than they were aggressive sellers. Okay, but what we see again over here is we see a dry up of the volume, right? So we see the volume over here being very, very large. So we see a large volume that corresponds to a large amount of buyers. So we use the delta and the volume to kind of they come together, they're compatible when it comes to taking trades. When we see high volume that corresponds to aggressive buyers, but the market fails to move up, what does that tell you? Well, that tells you that buyers are definitely failing. So we want to be taking shorts, right? If buyers are failing, we want to be taking sells, right? So something I discussed earlier on in the video was that there's never more buyers than sellers, right? You can have either aggressive or passive participants, right? And this is the beauty, where we can really read who's passive, because if we have a lot of aggressive buyers over here, so in this case, we had a lot of aggressive buyers, but the market failed to move up, right? So what this means is that there's passive sellers that are sitting at this level, and this is the secret behind every fair value gap. The secret behind every fair value gap is you want to look for more passive participants than aggressive participants. So we have more aggressive buyers than sellers, right? But the market failed to move up. So what that means is that there's more passive sellers than there are aggressive buyers, right? So when there's more passive sellers than there are aggressive buyers, this is what drives price lower. And vice versa, if there's more passive buyers than aggressive sellers, this will drive price higher, right? So in the next video, I'm going to be going over a a long example, right? This is a short example, but really I want traders to understand my overall thesis when it comes to using the ATAS platform. So once again, I'm going to go over the settings, right? So the bid and the ask, because the market is an auction, right? Every auction has a bid and the ask. The market is no different. We use the delta to determine who is aggressive and who is passive, how many aggressive buyers and how many aggressive sellers there are. So if we can determine how many aggressive buyers and sellers there are, when we see aggressors that are failing to drive price higher, in this case, drive price higher, we know that there's more passive sellers than there are aggressive buyers. And this is what truly gives us the edge in determining whether a fair value gap is going to hold, right? Not a body, not a wick, not time, not an OTE model, not an ICT model. None of these things can give you the precision and accuracy and the true meaning behind every market the way that order flow does, right? So order flow gives you essentially the why behind every fair value gap, or the why behind every liquidity sweep. And we're also using an additional footprint chart volume, right? The volume profile. The volume profile is the second row, which essentially tells you the bid plus the ask. And it tells you where most of the market transactions are happening, right? So in this case, what's really interesting, if we read the next candle as price kind of broke below this level, what we're looking for, again, we're seeing that most of the volume is situated in the lower half of the candle. So when we see a dry up of volume, that means that there's less market participants, less aggressive buyers and sellers that are hitting the bid and the ask respectively. And so what that means is that there's less interest between buyers and sellers, right? When the volume decreases, it means that less market participants, buyers and sellers, are interested in those prices, right? So this was at 60.78 and we see the volume increasing at 60.74. So the market is interested in lower prices, and we can only read that when we see the dry up in volume, and the dry up in volume is again part of order flow. So this is how I was able to kind of frame a short bias for the session. So again, if we go to the Discord, we had a kind of a short bias for the session. And the way I was able to do that was really just by reading the order flow, right? So again, we had the if I pull this up, right, we look at we use order flow to determine whether who's aggressive and who's passive, right? So this was the level I was looking at live in the market, update on key level, update on key level. So what allowed me, again, in real time, we're reading the order flow, what allowed me to determine whether we're bullish or bearish comes down to reading this, right? Whether this zone actually held, which it held perfectly. I usually give my zones pre-market, right? So again, what allowed this zone to hold was the fact that we see a lot of blue, a lot of aggressive buyers that are failing, right? So this is a quick kind of introduction to the order flow part 2 series, where I've gone over the settings and the basics of order flow and how it works from a chart perspective. In the next session, in the next few series, we're going to be going over case studies and how I determine my levels and how I determine a pre-market game plan, which typically turns out to be very accurate. And I kind of post this all in the Price Action Labs Discord, right? So if you enjoyed this, give it a like and thumbs up, and I look forward to seeing all of you in the next one.